This perp market is far from being settled. I think there's a lot of room for new entrants. It is an imperative that Solana builds out a competitor to Hyperliquid.
DEX volumes on Solana have actually been increasing in recent weeks. So we can see in June, it was just a month like no other. I do strongly think that distribution is what matters. Hyperliquid is actually losing market share in the RWA perp space to Binance.
I think these partnerships between token projects and big distribution brand names, I think those are going to become more common. We have this massive battle of titans being drawn out, right? Coinbase on one side and Robinhood on the other side. And one thing that I've learned in crypto is that you should never
Nothing said on inflection point is a recommendation to buy or sell securities, tokens, or any other assets, nor does it constitute a solicitation or offer to invest in any fund, product, or financial instrument. This podcast is for informational purposes only. The views and opinions expressed by hosts and guests are their own and do not necessarily reflect the official positions or views of their respective employers or affiliates. Hosts and guests may hold positions in companies, funds, tokens, or projects discussed. Everyone, welcome back to Inflection Point. I'm your host, Mark Arjun, and as always, I'm joined by David Lawant and Michael Marcantonio. Hey guys, I know markets are up, but World Cup sides aren't doing so well. How are you guys doing?
I love the square, Mark. Yeah, you can trample on us. Brazil had a pretty tough defeat. US as well. Other than that, things are good. Market has been recovering, but maybe should we start talking about the World Cup as we have been in the past few episodes? I think it's been a big week there too.
It's been a disaster here on the homeland for the United States. I've just been absolutely outraged. I'm in the camp that is not claiming a single moral victory over this. Okay, we're done with moral victories here. It's just tremendous how two things. One, we can't get a better team than this. I mean, this is the best that we can do in the United States. It's truly astounding to me. And then second is that we're on the world stage. We create this big controversy about the red card. Donald Trump intervenes, and everyone hates us. We're the bad guys now. And then we go out there and we play absolutely pitiful. It truly, to me, is it was an embarrassment, and I don't know what we're going to do about it, but it's got to change because these World Cup games, they are absolutely massive in terms of viewership. I mean, I don't think most Americans realize this, how many people watch these games. And I wouldn't be surprised if yesterday more people watched that game than the Super Bowl. And yet we go out there and we put on the most pathetic performance I've ever seen in my life. The United States has to do better. We got to regroup. I didn't think it was a matter of coaching. I think our coaching was sound. I think it was just a matter of heart, a matter of fright. The guys looked scared. They couldn't complete a pass. The goalie forgets how to kick. I mean, it's really just an absolute disgrace.
Oh man, I wasn't expecting Michael to be this outraged. I guess for whatever it's worth, think about Michael's outrage, multiply that by 10, and that's the outrage that you are seeing in Brazil for the Norway defeat. But just to stay in the US for a while, I think this was a great team. I mean, it was definitely a bad day. The defense was unforgivably bad. I don't think there's a lot of questions on that. But I hope this is the continuation of a trend. I agree with you, Michael. I think this was the best team that the US has ever had, maybe ever. It was a pleasure to watch the first 4 games. I don't know what happened in this one. Maybe it's a young team. Maybe they got nervous. It's a terrible timing for a team to have a bad day like that. But yeah, I guess that's how it goes a little bit with soccer.
The reason why Brazil is such an elite team historically is because of what you just said, that when they lose, they go home and it is an outrage. Okay. When we lose, they come home and everyone sings kumbaya and how we made such great progress this time around and we'll get them next time. We can't do that anymore. I mean, I actually am most upset because I think this set us back 20, 30 years. Honestly, I do. I think we had such goodwill. We had so much wind behind our backs, and we were going straight into a home field advantage where the world loves America, and we go out there and we just weren't ready for prime time. It didn't look like. I mean, we made Belgium look like the greatest team of all time. Okay, we made Belgium look. I don't think Belgium was sweaty. I didn't see a single droplet of sweat on a single player in Belgium. All right, they were out. They didn't start their best players. Belgium didn't start their best players. Okay, and everyone's saying to themselves, "Oh my God, what a disastrous first half!" And then we get into the second half, and everyone's like, "Oh, looks like a totally different team. We're back." Yeah, we're we weren't back. We were not back at all. We were very much not. So I don't know. I don't think this was the best team that we've ever had. I don't think you can say that. I don't think you can say that because of the results. I just care about the results here. It was certainly the most hyped team we've ever had. I mean, Pulisic has been on every commercial I've seen for the past 3 weeks. Okay, they're treating this guy like Michael Jordan. They're calling him Captain America. Captain America fights when he's down. Okay, Captain America fights on one leg when he's hopping around, when he's injured. This guy stubs his toe and he's out. He takes himself out of the game. I don't want to see Christian Pulisic ever again in my life. Okay, that's it.
Okay, that was very harsh. I guess on my end, I think watching the U.S. team play was an absolute delight until that game, and I hope they will carry the best moments from here on. Let's see how we go from here.
Well,
Mark, how are you feeling about England? England versus Norway. What's your call?
I mean, I'm backing England. I'm gonna say England. England edges it. I think some of the England players, Arsenal, Man City. I support Man City. They've played with Haaland before. That X factor can be diminished some bit. Norway has Odegaard and some other really class players, but I think this England squad with Thomas Tuchel, who's a great manager, I think we're gonna get it over the edge because I think tactics are probably gonna win this game.
Nice. Let's see.
I,
And
I'm,
I
qu-
gotta
I'm
say, on Holland, I mean, that guy is an absolute monster, and it's just so hard not to like him. I'm Brazilian. He defeated my team. I was there in the stadium, and I still cannot hate Holland.
I'm
Very, very
hopping.
impressive
I'm
individual.
hopping directly on to the Norway bandwagon. You heard it here first. Okay, I'm gonna if I would buy a Norway jersey right now if I didn't think it would take 4 weeks to get the jersey. I bought an American jersey. I bought an American jersey the week before the group stage, okay? And I still haven't gotten my American jersey. I guarantee it arrives today, guaranteed. But no, I like Holland a lot. He's impossible not to like. He's a freakish athlete. I love Norway. I'm actually quite impressed with England, so I was very invested in the England Mexico game. I thought that
That
was one of
was
the
the best
best
game.
games. One of
Yeah,
the
one of the
best
best games
games.
of the World Cup so far.
I mean, the Mexicans, say what you will about the Mexicans, they played with heart. They played to win. They were just so passionate, so fierce. England played a phenomenal game too. Jude Bellingham, first of all, the most British name you could ever come up with. Okay. I mean, you can't get a more British name than that, Jude Bellingham. Actually, Harry Kane is close. Sir Harry Kane. I think that's a very sound squad. I mean, I can't stand Declan Rice. I don't know why. I just don't like him. But you can't help but like Jude and Harry. So I'll probably be rooting. I'll definitely be rooting for Norway. But I like what I'm seeing out of England.
Yeah,
Yeah.
let's see. Should we pivot to markets?
Yeah, 100%. Let's do it. And I wish stuff were up 100%, but I mean, this past week hasn't been so bad. We're looking at what BTC is up like 8%, Ethereum's up over 14%, Solana's up even higher. I think it's been a positive week. Why do you all think we're seeing these kind of moves now?
David?
I think there's been a couple of factors. First of all, and we haven't discussed this in our last episode because we had the special guest appearance of Hester Purse, but Strategy came up with the big announcement, right? So a framework on how to conduct and to run their reserves, and I think that was a big reason why we saw some stabilization on most of the MSTR capital complex. Stretch is not back at par, but last I saw it was trading around 90, which is a big change from the mid to low 70s when it was before that announcement came out. So that was kind of interesting. Just yesterday, we saw Strategy do a $200-something million Bitcoin sale. So I think Strategy is showing that they have flexibility and that maybe they have more flexibility than a big chunk of the market was thinking. So I do think the first component here is that we saw some stabilization on the Stretch and Strategy story here. The second thing is that, and this is, I think, a more technical aspect, and this is something I've been seeing at the desk and also when I'm looking at broader indicators in the market. Whenever Bitcoin crosses under the 60K level, the amount of capital that comes in to buy and to support prices is actually very impressive. You can see this in many different ways. My preferred way to look at this is the skew of the Bitcoin order book, right? So if you look at the Bitcoin spot markets, you can kind of build an order book and see where all those bids and asks are sitting. And whenever we cross under 60K, the way that the order book gets skewed to the buy side, meaning that there's a lot of buy inflow into the market, is actually very impressive. So this all, I think, points to that range that we have been discussing since we started the episode, 60K on the lower bound and 80K on the upper bound. It still seems that the market is very comfortable defending those borders.
Yeah, I mean, I agree with the Stretch take, and I think, look, as you just mentioned, they sold $200 and something million worth of BTC. I think that's not material, but not immaterial. And Stretch rebounded. I mean, Master's gone up because BTC is going up, but I think this bigger sell and a positive reaction to the strategy suite complex is maybe kind of shows that the first sell did inoculate the market, and then now they're coming to terms with it. Obviously, I don't want to make this a Stretch episode. Sometimes we go off a lot on it, and I just wanted to interject before Michael gave his piece. But yeah, and then I love the tweets that you put out, David. I don't even know what they call on X anymore. But yeah, talking about that same options complex around BTC, I think they're really interested, and anybody listening should definitely check that out. But yeah, Michael, what are your takes?
I have said on this podcast the last couple of weeks that Michael Saylor needs to do a better job of communicating his strategy. I think he's done a better job over the last week in doing that. And I think you're seeing the market respond somewhat more favorably. I also was on record in saying that I don't think MicroStrategy has a significant capacity to sell Bitcoin. I think that was proven wrong this week by the $200 and something million sale. So MicroStrategy continues to make moves. I think Michael Saylor is the X factor. He is the most important person. Obviously at MicroStrategy, but maybe even in Bitcoin world, he is the most important person. And what he says, the market listens to. So I'm happy to see that. I'm a little confused otherwise as to why the market is up right now. I would not have predicted that Solana would be up by 10, 12% over the last week. And I don't see anything fundamentally that has changed in DeFi world or Solana world over that time. So I'm wondering, is this just a bounce from the $60,000 limit that we have been looking at and what David's talking about with respect to Bitcoin? Or is this something broader in the macro picture that I can't see?
So I think I will address that first. I'm just gonna pull up on the screen, just to touch on your point about transparency, about Saylor being open to the market about what their plan is. And I actually think probably that's the biggest reason, Michael, more so than what exactly he did. He just put a little bit more clarity around it,
Yes.
and investors and market participants can digest that and understand it a little bit more. He actually gave himself, in a sense, he gave himself more power. There was the BTC monetization, or these fancy words saying he just wants to be able to sell more BTC. He wants to be able to repurchase MSTR. So he actually, in one sense, put more levers in his toolkit. So in a sense, more uncertainty, but at least now the market kind of understands that toolkit a little bit better.
Yes.
So I think that's probably the most important factor. And then on the Solana side, what I've been seeing, is is one thing in particular. And if you chart out the price, I wish I had this chart. It's on the Blockworks on my personal home dashboard. But if you chart out the price of ETH, Sol, Arbitrum, a lot of these other tokens against DEX volumes, there's a very tight correlation. And DEX volumes on Solana have actually been increasing in recent weeks. And the two biggest reasons behind that are, one, real world assets. So real world assets on Solana, I think that they're at record highs. And then the second is obviously, well, not obviously, but the second is meme coins. Or I actually do have a chart of Solana's tokenized asset volume here. So we can see in June it was just a month like no other. I mean, I think a lot of this was thanks to Backpack and the SpaceX IPO and Micron, a lot of these other AI stocks and space stocks that are in right now. And so DEX volumes on Solana have increased. Not only that, but total weekly transactions hit all-time high, non-voting transactions. And the last thing is that active addresses have also started to skyrocket. It's actually skyrocketing a bit too much. I think it might be bots, but a couple of my colleagues don't like active addresses because it's not equivalent to users. But I think, because they say, oh, it could be bots, and I think that's a bit botist, because bots pay the same transaction fees that regular humans do. So I don't care who's using your chains, if it's bots or humans, it equals the revenue on the chain and our review on the chain the same way. So I think those are some many factors that maybe why Solana has not massively outperformed, but has had a better time of it in recent weeks.
So I will say
awesome.
the one change that I've seen over the last week on Solana, and I typically wouldn't mention this on this pod, but I think it is relevant, is a massive meme coin has launched on Solana called Black Bull, by Ansem, who is one of the most important. I would call him he's very highly regarded in the space in Solana, very heavily followed, and he launched a meme coin that has just taken off. Black Bull, I think, is gotten the attention of a lot of people, which I think is very interesting, and I think that has accounted for a significant amount of volume uptake. I mean, we've seen in the past, guys, that meme coins can impact price and can impact fundamentals. Look no further than the Trump meme coin launch, right? Obviously, that was a little bit different circumstances, but you are seeing a healthy amount of retail activity picking up. On your comment about bots, Mark, I think it depends on what you count active addresses for. If you're counting active addresses as a proxy for organic growth, then you're going to have to figure out a way to limit Sybils, what we call Sybils, or different addresses that are run by the same shop. If you're counting it solely as a proxy for activity, just in and of itself, then I definitely think that addresses matter. Of course, you can have a situation where you have the same number of users on the chain and they just spin up, hundreds of different addresses in order to engage in trading. And yes, they are paying fees. That's true. But if it was just one address, it would be paying, and with the same number of transactions, it would also be paying the same amount of fees, right? So it's really a style of trading rather than an actual uptick in potential activity. I can explain a little bit more about why you see bots sibling a lot. So there's actually an interesting reason for this. On Solana right now, you have far more of an ability to limit, as a market maker, to limit who you actually sell or who you buy from. Okay. When you're making markets on Solana, you can programmatically limit certain addresses based on the relative toxicity that you believe the counterparty has. And in order to avoid that, bots will sybil addresses in order to get around that. Right. So that is one reason for sibling. You see it in TradFi, even though it's definitely illegal in equities, but you've seen it in the past. And I think it's something that the market definitely needs to figure out how to monitor for sure. But right now, that could be a cause for some of the increase in active addresses.
Interesting, but it does feel like it doesn't matter how you count it, there is more network activity in Solana.
Yes,
And
yes,
that's very interesting. I wasn't paying too much attention to this. It feels like Solana is probably dominating decentralized spot trading,
yes.
while places like Hyperliquid are stronger on the decentralized perps trading venue. Very interesting to see this kind of a little bit of a difference between the two main on-chain trading venues today.
And I think that that cannot be a sustainable long-term dynamic. Meaning, I think that either Solana and Hyperliquid have to dominate both, or a third party is going to come around that will dominate both. Meaning, spot markets. I mean, David, you tell me, but historically, right? You don't want a spot market to be siloed off from a perps or a futures market, right? It would be better if both were done on the same market.
That's an interesting question. You mean, I guess, if you have both the spot and the perps market in the same venue? Yeah, I wonder if
Yes,
this has something to tell about because the one important thing about the perp is what is the underlying index that
right,
is tracking, right? And you want an underlying index that it's not easy to manipulate, right?
right.
Most of these perp exchanges will use some sort of a blend across
Yep,
exchanges and things like that you cannot
yep,
easily move the price.
yep.
Yeah, I wonder if having both under the same roof could maybe make a little bit of a difference here. But yeah, it's a good question. I got to think about it a little more.
Well, my contention has been for the last year that Solana has to build out a competitor to Hyperliquid. Um,
Yeah.
it is a imperative that Solana builds out a competitor to Hyperliquid. Um, it has been a big challenge for Solana historically. Now there are three potential options today. There is obviously Drift that had a terrible attack and is sort of not being taken. Is not driving volume today. They have to figure out what to do there. There's Pacifica, which is the leader right now in Solana in terms of volume for perps. And then there is the new entrant, which is Phoenix, which had a very interesting implementation of a spot plob for years. And is done by the Ellipsis Labs guys. And Phoenix is an interesting opportunity for Solana to start generating real volume for perps. I do think that for vaults and for RWAs to really take off on Solana, you need to have some sort of futures as well. I think that a integrated vault, RWA, and basis trade, all composable, all on chain, will be a very powerful combination.
That makes sense. That makes sense. And I wouldn't even ignore the new entrants, right? I mean, recently we saw Robinhood come with the Robinhood chain. So they are bringing a bunch of partners as well. So folks like Uniswap on the spot side and Lighter, which is kind of a smaller and newer Hyperliquid competitor on the perp side. These guys obviously have massive distribution. So it's a very interesting space. We'll see how it
Actually,
moves going forward.
Actually, that's a great point I wanted to raise, David. And I think it's very germane to this pod, which is I wanted to ask the pod, do you think that the dynamics have been set for perps, or do you think they're going to change markedly in terms of who is leading? Meaning, is today, even in this late hour, one could argue, is there still a lot of room for new perp markets? What we saw in the beginning of June was Kalshi launched the first U.S. regulated perp market. And within the first couple of weeks, it had something like $5.5 billion of volume, which is quite impressive for the start of a perp market. Perps usually take a while to start building and to start generating volume. The Kalshi solution, I think, was quite novel in how they were able to get regulatory clearance at the CFTC. I think they did a phenomenal job there. My contention is, and I'd love to know your guys' thoughts, is that this perp market is far from being settled. I think there's a lot of room for new entrants. I think Robinhood's going to make a run at it. Coinbase is obviously going to make a run at it. But I think that there's even new actors that have not yet popped up. And I think that ultimately perps are going to be a positive sum market. Meaning, I don't think with more new venues, you're going to have a winner take all scenario. You're instead going to have, I think, a larger overall market that is going to be more liquid overall.
So, yeah, you said a lot and a lot of good points, and I want to touch on some of them. And just to clarify, so I mean, the meme coin activity is definitely helping Solana up right now. Ansim's coin, I think it became popular. It wasn't him who launched it. It was some anonymous somebody on pump.fun who launched it and then donated, I think, I could be wrong here, but 65% of the supply to Ansim, and then he's effectively taking control of it now and is giving it away, and Ansim's doing Ansim things. And then if we just look at, before we talked about volumes, spot DEX volumes and stuff, and then so this is I'm showing here what the spot landscape looks like, and Solana is the leader, but it's not like the dominant leader. Ethereum is in second place. Base has actually picked up a lot of market share over the past year. And then to kind of put some clarity or some numbers behind the question you asked about this perp space, this is what the perp on-chain market looks like now in terms of market share. And the orange is trade XYZ. So let's just count that as Hyperliquid too, honestly.
Yep.
So that's like over 60% market share for Hyperliquid. And then we have the tail end of all of these other products. And all of these, I mean, these are Asters, new variationals, new lighters, new. So this is still a very early market. And
yes.
What I like about the Robinhood chain is that I do strongly think that distribution is what matters. And I have been a believer in the DeFi mullet. And so here, I want to show Hyperliquid is actually losing market share in the RWA perp space to Binance. Binance is taking a lot of market share from Hyperliquid. Hyperliquid's volume, notional volumes, have been just shy of $100 billion in the perp space. Obviously, this is trade XYZ. I'm generalizing here for the past few months, and so I don't think that Hyperliquid losing market share is a bad thing. This kind of reminds me of
sorry, I don't understand this chart. You're saying in January, Hyperliquid had none of the RWA perps market. Okay, so it had none of it because I guess Trade XYZ hadn't been out yet.
Yeah, exactly. It wasn't. Yeah.
Okay, got it. Interesting.
I think it's important to keep in mind that this is a market share shrinkage amid an expanding market, right?
Yes.
Doesn't mean that Hyperliquid is seeing a decrease in the OI or trading volume numbers. It just means that other folks are growing more. And honestly, I don't think that should be very surprising, right? Because Binance has this massive user base. Very simple to use, right? You don't need to be on-chain native. You don't need to set up a wallet in order to trade perps on Binance. So I think that's a very interesting trend. And I guess you wanted to make a point, Mark, on the Robinhood chain. I want to hear that one.
Oh, so yeah. So I mean, I want to highlight the Binance because Binance has most of the market share in the RWA perp space. And so it's really about the distribution. They have over 100 million users, and then Robinhood has something like 27 million users, I think. And so they're going to get that distribution. And so, I mean, obviously Lighter, I think they're using Lighter as the back end, and they're spinning up their own instance on this Arbitrum chain. So I don't know how much it actually helps Lighter, the token. This is a growth strategy. I assume maybe a marketing strategy. I don't, and Robinhood is going to take their own fee. So it's not, and it's going to be two separate markets because it's in its own instance. So it doesn't even help them necessarily from a liquidity point of view. But I do think the protocols that have these front ends, like look at Aerodrome and how much is benefited from Coinbase, or Morpho, how much is benefited from Coinbase, i.e. Base. I think these front ends are really what's going to be the biggest distribution. And even in this chart here showing that OKX, another centralized exchange with massive distribution, is also becoming a serious contender in the RWA perp space. So, and this is why we're probably going to see more deals like these in the future, if I had to guess.
Well, it's not surprising to me that Binance would have a majority of market share. They've been king of perps since inception of perps, really. Binance is the most traded venue in the world to this day. They have the most volume on perps, and they make every other venue look tiny by comparison, and it's always been that way. So it's not surprising to me that they would dominate RWAs. I think what's interesting, though, is that despite Binance's dominance, you have seen Hyperliquid take a significant amount of market share away. Now, one could argue that they haven't taken market share away from Binance. They are just appealing to different users, namely those that don't want to KYC. But it's not just that, I think, because it is significantly more difficult for a US user to trade on Binance than it is to trade on Hyperliquid. I think this is a story that needs to be talked about more. It is fairly trivial to set up a VPN and trade on Hyperliquid. It is not sufficient to simply set up a VPN to be able to trade on Binance. Right, you need to have a offshore entity. You need to be sufficient. You need to have no U.S. nexus, no U.S. ties. So I do think that Hyperliquid is filling that niche, and the question is it filling that niche solely because of the AML KYC constraints, or is it doing something else? The bull case is that it's doing something in addition to it. Namely, it is generating new type of users because it has new types of trading products and a better experience. That's the bull case. And so I think that there is a new paradigm that's forming. In terms of your point about Robinhood Chain, Robinhood Chain is going to take a play out of the Kalshi playbook, which is that you can set up a regulated US front end and plug it into a decentralized backend. And you're going to be able to, and that's what is happening right now with Robinhood Chain and Lighter. I think this marginally helps the Lighter token, I would say. It depends, of course, on the fee split between Lighter and Robinhood and the economics there, which I'm not privy to. But you can imagine that there's going to be more fees that are going to be generated for Lighter by giving them direct access to U.S. markets, and those fees will likely go to buying back the Lighter token.
Yeah, I want to double click on the point you mentioned, Mark. I think these partnerships between token projects and big distribution brand names, I think those are going to become more common and are going to be one big venue of growth. Lighter, I think of Lighter as Hyperliquid's kind of younger brother, much smaller than Hyperliquid, of course. So I think that's a way for them to speed run and try to latch on to a user base that is obviously much bigger, not only in terms of number of investors, but also on the disposable income that those investors have, right? So the average, I haven't seen the numbers, but I would guess that the average asset on platform that the average Hyperliquid investor has can be much bigger than in some of those crypto exchanges. So yeah, I do think this is a trend that's going to remain. I actually think this is quite positive for Lighter because I think now you can see a way or you can draw a path for them to develop into a major venue that can potentially even one day start to get into spitting distance from Hyperliquid. We're seeing other tokens doing platform deals like that, right? One team that I'm particularly a big fan of, and one project that would definitely not sleep on, is Athena. So Athena is also included in the Robinhood partnership, but perhaps even more notable, Athena was announced as, I think, the third crypto asset that was integrated into BlackRock's Aladdin platform. So that
Ooh.
was, I think, Bitcoin is one. I think the other might be ETH, and then USDE, which is Athena's yield-bearing synthetic dollar. It's kind of complicated structured product, kind of a tokenized basis trade type product that started to become integrated with BlackRock. So, I mean, these are big deal partnerships, and I would expect to see more of those.
Yeah, I think you're 100% right, David, on Athena. One of the best teams out there. Um, One thing that I think is worth noting when you compare Lighter to Hyperliquid is people forget about how long it took Hyperliquid to reach real scale. For if you look at the first year of Hyperliquid's volumes, it was it was slow on it was up into the right for sure, but it was not a massive success overnight. Okay. It did not attract significant volume and liquidity overnight. It took time. And if you actually plot out where Lighter is right now relative to where Hyperliquid was at the same period of Hyperliquid's growth, Lighter is actually doing quite well. Um, so you have to totally contextualize it, I think. And by that same token, you could even argue that Pacifica on Solana is doing quite well relative to where Hyperliquid was at the same time. So I think these things take time. Attracting liquidity is a chicken or the egg problem, because you need to attract market makers, but market makers are not going to go to your platform if there's not sufficient retail volume. So you need to figure out a mechanism for bootstrapping that liquidity. The typical way that it's been done, and you've seen it with Hyperliquid, was the points program and an airdrop. Lighter did something similar. It's been a very successful model, and I think that is one of the big questions about Robinhood. Will they drop a token? Will there be a points program? Um, it, it's typically, I've seen with centralized venues. And with obviously with L2s, where centralized venues have built out their own L2, they've been reticent to drop a token, and as a result, I think that's hurt their overall growth and their overall decentralized narrative.
I really hope that Robinhood does not drop a token for their chain. I think sometimes there's just too many tokens for actually no reason. In terms of points, the Lighter deal, Lighter did agree to something like 11 million lit tokens. And I think that'll probably be in the Robinhood facing platform. So maybe they'll get those as part of the rewards. But then, I mean, Lighter, apart from the Robinhood chain instance, Lighter doesn't take fees from retail, not like how
True. Yeah.
Hyperliquid does. They get money from like the float or from order flow,
Yep.
different order flows, stuff like that, right? And and
That's a good
honestly,
point.
they kind of had to, because how else are you going to compete against Hyperliquid? You kind of have to enter this zero fee environment. And I mean, in some instances, let me see if I'll pull this up here. It's kind of hurt Hyperliquid too, in a sense. This is Hyperliquid's quarterly revenue, right? So Hyperliquid has for 3 quarters in a row now seen declining revenue, but an increasing price, an increasing token price. And I don't think that these things are necessarily contradictory, while they are counterintuitive, because the growth is there, the TAM is growing, regulation is growing, and Hyperliquid is going into separate markets outside of just perps. There's the prediction markets, there's the RWAs, and there's other things that we've discussed on this pod. And so it's going for that neobank play, almost competing with Robinhood in a sense. And I think that you could justify the kind of valuations, especially because you can look at it and say it's very expensive by a price to sales ratio, but then most of their sales converts into net income, and they say, oh, by net income it's slightly expensive, but then in reality it's actually just pure cash flow. It's not an accounting trick. It's just USDC going into it. So the proper way, in my opinion, to measure it, even though it's such an early stage protocol, is from a price to cash flow perspective, given how positive the free cash flow is. And so from that instance, I don't think this chart is alarming. I think I'll probably write an article on Twitter about it next week. But
I'm not sure that chart says what you suggested at first, which is that Lighter is taking market share away from Hyperliquid, right?
It was more like the competition that has hurt Hyperliquid in a sense, and I was just showing their financials. It wasn't a lighter to.
But you could also explain that chart by 1010 happened in Q4, right, of last year, right, and 1010 rocked Hyperliquid as it did with the entire market, and that's why they've gone down a little bit. I will actually
revenues have gone on. To your point, Michael. To your point, their revenues have gone down since 1010, and you're exactly right. But their revenue market share within the crypto space has gone up. So this stock was doing well when the crypto markets were booming, and then when crypto was not doing well, Hyperliquid went from an offensive play to a defensive play. It went from increasing volumes in a separate sector, launching new products, while the rest of the crypto market was going down, which is another reason why the premium should be justified.
Right. I'm going to push back on one thing you said, Mark, which is that Robinhood should not launch a token. I actually agree with that position for most questions about whether someone or some business should launch a token. Let me just start with that. For perp dexes and for L2s, I disagree. I think there's a very real actual utility and value prop in launching a token. So if Robinhood were to launch a token and they were to drop the token to users of the chain, and specifically users of the perp integration that they have with Lighter, they would generate significant volume. Now, to stave off the phenomenon that you see in which you get short-term volume followed by a massive drop-off when the points program ends or the airdrop happens, you need to make sure that one, the tokenomics make sense, right? Nobody's going to want to hold onto a token long-term if the tokenomics don't make sense. And two, that the airdrop was successful such that you now have created tens of thousands of bag holders of your chain who are now your greatest advocates for your chain. This is what happened with Hyperliquid. Everyone asked themselves, you made a great point earlier, Mark. It is distribution is extremely important, right? It is the critical factor. But Hyperliquid had no real distribution. What they had was they distributed a massively profitable token to their users, and that tens of thousands of users became acolytes of Hyperliquid, and they carried the distribution narrative, and they carried water for Hyperliquid that continues to this day. And so rather than just be seen as a venue that you trade on, you are seen as an investment that many people have made. And they're just like early Bitcoin holders are the most diehard Bitcoin people because they have big bags of Bitcoin. So too are early Hyperliquid adopters.
I don't know, man. I'm torn on this one, especially because Robinhood is already a listed company, so there is already a Robinhood equity option that folks can go after. To me, it's kind of a similar case as Base from Coinbase. Unless I'm mistaken, Base doesn't have a token, right?
That's
and I
right.
remember that at least early on, the value proposition was, hey, the value of this Base network is this distribution that you can access related to Coinbase. So if this distribution is actually valuable, I don't think they should need a token. And the fact that if they were to introduce a token to me, it would be a little bit like masking the actual value proposition that they should have. I don't know. I think these guys already have a large enough customer base and that the distribution is already there. So if on top of everything that these networks are already providing, and by these networks, I mean the Robinhood chain or even Base from Coinbase, also within the same context here. If you have to add on top of that a points program, I would see that as a little bit of a yellow flag. But yeah, and I don't know. I'm also becoming a little bit of a maximalist on the token versus equity split here. I think you need to go either, and I know this is a theme for a whole new and different episode. I don't want to start this conversation here, but I'm becoming more and more an advocate that you either do token or equity, having both, like trading side by side. I think it's complicated and probably overly complicated. So yeah, I think on this one I'll side with Mark a little bit. I would not like to see a Robinhood.
So just to take a different perspective on it, though, and I know and understand the arguments against it, and those are good arguments. I think that the reason why it would be interesting for Robinhood and even for Coinbase with Base is right now the securities laws are limited in being able to airdrop your own public equity to users or customers of your products, right? Imagine if for the last 20 years, every time I bought an Apple product, I got a little bit of Apple stock, right? You can't do that. But you can do it in crypto. And in fact, that is like a pretty general theme in crypto is that the users of those protocols oftentimes become the owners of the protocols because they are able to benefit from points programs. I do think that Apple would be better off if Apple users owned Apple rather than just simply not owning Apple. And same with Robinhood. Robinhood chain users are not going to necessarily get airdropped Robinhood. Well, they're definitely not going to get airdropped Robinhood stock. But if they got airdropped Robinhood token, I think it's just a great way of generating distribution and very loyal users.
Oh, here I agree with you, and make no mistake, I'm very bullish on the token form factor,
Mhm.
especially long term, right? Especially
Yep.
once we have clear regulatory
Yeah.
kind of guardrails on how these things can and should interact, how regulated issuance of tokens could be executed in the US. I 100% agree with you. I think there is a version of the future in which tokens are very key. And I actually think maybe Mark can talk about this more than us, because I feel like Blockworks is building for that future, right? A lot of the initiatives with Blockworks Research and the Blockworks Investor Relation initiatives, a lot of those are related to token as a form factor taking off. I just think it's a little bit too early.
Yeah, I mean, I agree. I agree with both of your points. The distribution stuff, I don't think makes sense now to launch a token, and I'm glad Coinbase hasn't done it either. And then there's this dichotomy between these are publicly traded companies; they have a duty to shareholders, and why would they then leak some of that value to token holders? I don't think that's in the best interest of shareholders. And then we get into this weird like legal dichotomy here, and again, they're public companies, so you can target them, right? And so, but I do want to caveat what I've been saying, but I hope Robinhood doesn't drop a token anytime soon. I think further out into the future might be in a more appropriate time. I'm glad Coinbase has held off for so long. But for right now, I mean, I've been saying this for years, to be honest, but I'm tokened out right now. I mean, a lot of the other, if you look at the other comparisons, OKX, crypto.com, like a lot of these BNB, right? But I mean, BNB has its own like ecosystem and stuff too, and yeah, so that one's
OKX
a
has had
little,
OKX had a token, right, for a while, or at least they did.
Yeah,
Yeah.
yeah.
I'm calling the ones with tokens, yeah, exactly.
Okay. Yeah. Okay.
Yeah, so I mean, the tokens performance haven't done well, and then crypto.com had this whole thing where they burned $2 billion worth of tokens years ago, and then they reminted them because they ran out, and you just use them for staking. And these aren't publicly traded companies, so I mean, they can do whatever they want with this. And then another argument for it would be if the public company wanted to decentralize the chain that they launch, and even that I don't necessarily agree with, at least not now. I want to caveat everything I'm saying with not now, not next year, not next 3 years. Yeah.
Well, BNB has been one of the most successful token projects. I mean, it's top 5 token, right?
Yeah.
Uh, s- uh, here's what
Deflationary, by the way, one of the few deflationary tokens in the ecosystem.
Yeah, very good tokenomics.
Very good.
They pioneered good tokenomics, I would
Right.
say. I'm not sure if too many
And I
projects
think
that are.
and I think it's slept on a lot by U.S. markets, to be honest. I don't think we talk nearly enough about BNB. That said, I have a question for you, Mark. Why should I use Robinhood Chain when let's say I'm a Hyperliquid user? I've got some nice Hyperliquid bags that were airdropped to me for free. Why should I use Robinhood Chain when Hyperliquid has made me rich, right? Why should I use any other chain, any other perps product, except for the one that has done good by me, right? My use of Robinhood Chain is going to be monetized upwards to shareholders, of which I am not one. Now, I could become one, sure, but the fact is that most retail users of Robinhood, they should benefit in the equity or in some sort of price appreciation of the asset that they're using.
Why should you use Robinhood Chain? You probably shouldn't. You're not necessarily the customer. I don't think they're looking to tap into necessarily the Hyperliquid customers there. Why should you use Robinhood Chain? The answer is you're using it through their Robinhood wallet. You can get 7% yield on your stable coins, insured by Lloyd's Bank. You can get access to perps, and you tell your friends, oh look, I am who are not using Coinbase, who are not on chain, who are not that tech savvy, and you say, oh look, I'm earning 7%. Oh look, this is where I get access to my stock, or this is how I make my leverage bet. I think that's the market that Robinhood is going after right now.
So you're saying that their play is to convert new users, namely Robinhood users who are not necessarily crypto native users.
Yes, and further entrench their existing user base into the ecosystem.
And to this point, I mean, we have this massive battle of titans being drawn out, right? Coinbase on one side and Robinhood on the other side. Those two platforms are more and more looking like each other. I think actually the main loser here are the financial platforms that are not seeing this change and are not catching up with what Robinhood and Coinbase are doing. That's where I would be most bearish, because I agree that the crypto native crowd, they're on Hyperliquid and they'll probably remain on Hyperliquid. But if you are a Coinbase customer, or if you're a Robinhood customer, and if you want to, for example, want to start trading perps, I just think that the path here is so much easier. And one thing that I've learned in crypto is that you should never underestimate the benefit of convenience. We saw that with the ETFs. We saw this with a bunch of these more TradFi type products linked to crypto getting launched, and the benefits of convenience for the broader audience, not for the crypto native audience, but for the broader public. I think they're very significant.
How cool would it be? And this is going to be a totally outside of the box concept. But how cool would it be if Robinhood tokenized their securities and airdropped them to users that use Robinhood Chain? Now, this would be redounding to the benefit of the stockholders, I think, in that you're not actually creating new equity, you're just simply repurposing the existing equity, and also could be used as a form of a currency for the Robinhood Chain. I don't know. I think that there's some interesting there's something interesting there, ignoring all the security laws for a second and what issues would happen.
No, I agree. And I hope our securities laws will allow us to do something like that in the future. Of course, we're a long way off. But again, I'm very, very bullish on the token form factor. I do think that we're going to see a lot more things than what you just said in the next few years. We just need the right regulatory environment. We just need the on-chain infrastructure to be more in place, perhaps. But I think that's the path, Mike.
Yeah. So we've talked about Bitcoin, Solana, hype, and everything that they're doing. Let's end it on Ethereum, because Ethereum's also had a semi-positive week. It's also had some big changes, mainly being that the Ethereum Foundation is stepping back. They've been, telling the market about this change for some months now, maybe since the end of last year. They're planning to reduce their workforce by 20%, cut their budget by 40%. And in the in the wake of this retreat, and I don't know if there's a better word, but I'm calling it a retreat from the Ethereum Foundation, there are other entities that have spun up now. There's been Etherealize before and the Ethereum Community Foundation before, but I'm talking primarily about ETH Labs and Ethereum Institutional. And ETH Labs is, what both of these entities are, what's interesting is that both of these entities are going to be funded by the largest treasury DATCOs, Bitmine and SharpLink. And I think that's one, a sustainable form of like income for these nonprofits. And two, I think despite what I'm probably reading on Twitter, I do think that the incentives are aligned there. These are some of the largest holders of ETH. And I think that while the Ethereum Foundation has done well for the Ethereum protocol, I don't think the Ethereum protocol can do well without ETH doing well. And I think there probably needs to be more focus on one, ETH the asset, and two, institutional adoption of ETH and Ethereum. And so, now, 10 years into Ethereum's history or just life, we have 5 different, I don't know what to call them, entities, foundations. And it kind of shows the nature of how decentralized Ethereum, or how large, or maybe how embedded Ethereum is becoming in the crypto space. Let me ask you all. Let me start with you, David. Do you think this pullback from the EF and then these new entities, do you think this is a bullish outcome?
Yeah, great question. I think this is a major theme. We should probably bring someone from one of the large Ethereum DATs to talk about this in depth. But yeah, no, I think this is long-term bullish. It has been a long time coming. For those who have been in the space for just a little longer, you probably remember, I think that was early 2025, probably September 2025, when there was a big shakeup on the Ethereum Foundation, because at the time, there was this a lot of complaint coming from the community. At the time, Ethereum was underperforming Bitcoin massively. It kind of still is, but at the time, we started to see the ETH BTC ratio going to like multi-year lows. And there was this impression that the Ethereum Foundation was not listening to their users, right? Which are basically the developers or the folks who are using the network. So then in early 2025, there was this big move by the Ethereum Foundation. They brought in two new folks, Tomasz and Xiao Wei. Those are folks who had a very like engineering mindset, and the whole perception of the community was that, okay, awesome. Now the Ethereum Foundation will start listening to us and will start caring maybe a little less about those 5-year roadmaps, these super theoretical and long technical roadmaps that the Ethereum Foundation was focused on. It didn't take too long. It took maybe about a year for a lot of that to unwind. And this is all to say that this has been a very painful and long transition. But I think we're getting into a good place. So the place where we are now is one in which the Ethereum Foundation is focused on the core properties of the protocol, right? So Vitalik named them as crops, which is censorship resistance, openness, privacy, and security. I think that's these are the 4 main factors that the Ethereum protocol should worry about, and that's where the Ethereum Foundation focus should be. So that's what the shrinkage at the Ethereum Foundation level is about. At the same time, you have all these other new entities that are springing up, and they're much better positioned to talk to the BlackRocks of the world or to the big financial institutions of the world and showcase why Ethereum and why they should be engaging with the network. So I'm very bullish about the concept. I do think it took a little long or took us a very long time to get here. It was a multi-year process, but I'm happy with the end result. I don't think the market is going to reward ETH, the token, as quickly, because we have been seeing these backs and forths and these changes in structure many times. When that early 2025 changing structure happened, There was a little bit of flurry and excitement with the ETH token that eventually did not pan out. So it's been kind of a lot of backs and forths here. So I think the market is not going to pay ahead. It will wait and see what the results are. But I do like the structure, especially for a project that is as decentralized as Ethereum is. This idea of a small but very focused kernel on the neutrality and the more core technical aspects with these other guys who are very well backed, by the way. Here we're talking about the likes of Joe Lubing and then the SBET and Bitmine. I mean, these are large folks with deep pockets. So I like the setup. What do you guys think?
I think there is a debate right now with respect to L1s about the role of their foundations or their labs. And you have two models right now. You have the Hyperliquid model, in which the Hyperliquid Labs team is effectively controlling the entire chain for the most part. That has become somewhat decentralized a little bit with HIP3 and, of course, with the success of Trade XYZ, but they are still very much in the driver's seat, and they are treating Hyperliquid very much like a business. And they are able to scale quickly, and they are able to innovate quickly and solve problems quickly. But they have all the responsibility. On the other hand, you have paradigms like Solana Foundation and you have Ethereum Foundation, which, by all intents and purposes, these are overseeing more mature ecosystems now. They've been around for longer. Ethereum has certainly been around for longer. And the question is, do they actually start to mirror themselves more like Hyperliquid, or do they go in the opposite direction and really just focus on the core development work of the chain and to make sure that the chain is censorship resistant and neutral? You have heard a big debate on Solana about whether Solana should look more like Hyperliquid or a little bit more like the Ethereum Foundation. On the pros of what the Hyperliquid model generates is that they can start to actually have the people in charge of the protocol or stewards of the protocol start to do things that are directly appreciative of the token and are directly accretive to the token, instead of having to rely on third parties to do things that indirectly benefit the token. On the other hand, what you see is pushback from foundations and labs for getting a more business-focused approach with respect to the chain, because they can be seen as crowding out existing businesses that exist on the chain. For example, the more that Solana Foundation actually ships protocols or ships different markets, or it gets involved with the RPC business or gets involved with perp markets, the more existing perp and RPC and protocols are going to see that the government of the chain, so to speak, is interfering with their business, and they're now having to have unfair competition. So to the extent that that position is real and fair, Ethereum Foundation sort of saying we're just going to focus on core dev work and let others handle business, I think could be very positive. But we have to wait and see.
Yeah, 100%. I think Solana somehow is maybe in the middle of the two of them, and
Right.
Solana's still thinking about the token. They've had this recent proposals with SIMD 547 with increasing the burn, and reducing the inflation over time. I think those topics have become taboo almost in the original Ethereum Foundation. And what I like about ETH Labs is that it's unlike Etherealize, and to their credit, they're trying to get institutional adoption. What I like about ETH Labs is that it has ex-Ethereum Foundation members. So it has people with the technical capability in order to make proposals and get that facet of the community that I feel like have been underheard, and I'm part of it, that there needs to be more focus on the asset itself and the adoption by institutions. So overall, I do like this move from the DATCOs, from ETH Labs, from Ethereum Institutional. I don't think that's why ETH has performed well in the past week. I think ETH has just performed well because honestly, since the start of this year, it's just had a higher correlation to Bitcoin. It basically is higher beta Bitcoin, or maybe even 1 beta, like 1.0 beta to Bitcoin right now. And that's kind of telling. It's kind of telling that Ethereum's lost its own narrative. It's just trading like a major crypto asset. And I think that these new institutions and this new push and maybe determination can help get Ethereum back on track to where it was like in the previous cycle. So yeah, overall I'm optimistic about it, but like David said, I don't expect to see any serious outcomes from this for some time, and I do think that we should probably have them on the pod and like dig a lot deeper into what their plans are and what their goals are and how like tangibly they're aiming to achieve them. We're coming up on time here, so any last thoughts from either of you guys?
That's all from me. I think we covered a lot of ground. I'm still interested in hearing what you think will be the score on England versus Norway. I want to highlight that I called correctly Brazil versus Scotland and Brazil versus Japan. We were off air. We skipped the Norway game, but my track record on that is very good. I want to see you now, Mark.
Yeah, you should have been placing some bets there as well, David. England Norway, such a hard one with the Haaland X factor, but I'm gonna go. I think it's gonna be a high scoring game. I think England's defense is bad. They cracked down in that 10 minutes, in that 15 minutes with 10 men, thanks to Burn, another good Thomas Tuchel selection. I'm gonna go for 3-2, England's favor.
I think Norway's going to pull off the upset, and I think that because I just see them having all the momentum right now. They're obviously very well coached, and I think Haaland is going to score a hat trick. That's my bet.
Good stuff.
Okay, lovely. You're going to be front leader for the Golden Boot. Okay, so we'll see if our predictions come true in next week's episode. So thanks for joining me, guys. And thank you, everyone, for listening. Tune in next week, guys. Enjoy the week.
Thanks, guys.
Next week, folks.